Fall is here, so grab your pumpkin spice latte and let's talk about tax planning. I'm Annie Hillman, owner of 1428 Financial, where we help business owners know and love their numbers. Let's get into it. The next few months are crucial for tax planning for next year. So today we're going to walk through a checklist so nothing falls through the cracks. So why start now? The biggest tax planning mistakes happen because people wait too long. December 31st is technically the latest deadline, but that's cutting it way too close. Starting in October gives you time to clean up any bookkeeping issues, make strategic decisions without rushing, actually implement tax saving strategies, and find a good tax preparer if you don't have one already. So let's get into it. October is going to be your foundation month. The first thing you want to do is get your bookkeeping current if it isn't already. This is the most important step. Make sure your bookkeeping is done through September, and if it isn't, getting it caught up is your number one priority. It's really impossible to make smart tax planning decisions if you don't know where you stand financially. You can either catch up now or pay premium prices to get caught up at the year end. Once your books are caught up, you need to make sure you've saved enough for taxes. To do that, you're gonna wanna look at your profit for the year so far, estimate what you'll owe in taxes, and if you haven't been paying your estimated taxes or saving your 25 to 30% of profit for taxes, you need to start now. It's better to oversave than to scramble in April when your taxes due. The last thing you need to do this month is find your tax preparer. You don't want to wait till January when everyone's already booked up. Instead, you want to interview potential tax preparers in October when they have time to really chat and you can ask them lots of questions. Good tax preparers get busy early, so make sure you secure your spot now. Make sure to ask them about their experience with businesses just like yours. So that's everything you need to worry about in October. And then we call November our strategy month. The first thing you're gonna wanna do in November is to meet with your tax preparer. When you meet with them, you're going to review your specific situation. Every business is different. You're going to discuss potential strategies based on your numbers, not generic advice. This is when you're gonna find out which tax saving year-end opportunities you need to make. Next, you're going to review all of your expense categories. There's a lot of Instagram tax advice out there, but make sure to talk to your tax preparer so you know that you're capturing all legitimate business expenses. Lastly, you're going to want to plan any major purchases. It might be advantageous to purchase new software or equipment before the year end, but make sure to only purchase what you need and don't purchase just for the sake of saving a little bit of money. You don't want to make purchases just for the tax deduction. After all that's done, we move into December, our execution month. Step one here is to finalize your numbers. Then you're going to implement any of those final strategic moves based on your tax preparer's advice. The second thing you're going to do is handle any of those year-end payments. Pay those outstanding business expenses before December 31st. Have your Q4 estimated tax payment ready for January. And if your tax preparer recommends it, consider timing any large client payments. The third thing you're gonna do is organize for tax prep. Gather your necessary documents, ensure your books are completely up to date, and prepare any additional documentation your tax preparer needs. Here's the most common mistakes we see when preparing for next tax season. Number one is not saving for taxes. This is the number one mistake we see every single year. If you haven't been saving, don't beat yourself up, but make sure you start saving immediately. And don't assume you don't owe too much. Use your actual data. The second mistake we see is being behind on bookkeeping. Messy books could mean expensive tax prep and missed opportunities. You can't make strategic decisions without accurate financial data. It's really important to catch up now instead of in January. Your bookkeeper will thank you. The third one, and this might ruffle some feathers, but it's trusting Instagram tax advice. I say this with all the love. Stop trying to deduct every single expense you see someone deduct on Instagram. There is so much bad tax advice online. What works for one business might not work for another. That's why it's so important to work with a tax preparer that knows your business. We're all for deducting everything you can, but make sure you stick to legitimate business expenses that you could defend if you ever had an audit. The next mistake we see is going it alone. Having a tax software is not the same as professional guidance. A good tax preparer pays for themselves by the advice and guidance that they give. Here's what you want to look for in a tax preparer. You want them to have experience with businesses in your industry. You want them to communicate proactively throughout the year. It's important for them to have a willingness to explain their recommendations to you. And they need to have a CPA or EA credential. If your books aren't current or you don't have a tax preparer lined up, don't panic. Book a discovery call today to get these things in order before year end. If you like this content, make sure to like and subscribe, and we'll see you in the next video.